let's take a look at some charts on OneInch for Brave New Coin. So OneInch is a DEX aggregator, just as they announce here at the top. It's not necessarily the prettiest UI or best functioning, but then again, most people who probably use OneInch don't necessarily go to the website. They do have various other functionalities that people use the token for, governance, some pooling mechanics, classic swap type stuff, DeFi, yield farming. They've got a series of sort of rotating active farms that you can participate in with various rewards, various APYs. So they aren't necessarily a Uni or a Sushi. They're more of a ZRX matcha type exchange. They announced not too long ago that they were moving to multi-chain. I think any chain that has the ability to go multi-chain where it makes sense should do it. At the end of the day, if it's about the users, I don't care if I'm trading anything anywhere. I don't care how it gets done. I just want the cheapest, fastest way to do it. So if that means trading through BSC, Binance Smart Chain, okay. What do I care, right? Like as the trader or the swap person, unless I'm an ETH maximalist, unless I have problems with DOT or problems with ADA or whoever it is, in a perfect world, it doesn't matter, right? It shouldn't matter, if we're being honest with ourselves, it shouldn't really matter. We can talk about security and decentralization and scaling and all the other stuff, but if ETH can't get its crap together, then people are going to go to BSC or wherever else, and that's what we're seeing. Hopefully layer 2 can fix the issues for ETH and the fee problems for ETH. But as somebody, and many people are thinking already, BSC is a proxy for ETH layer 2 in a perfect world, and fees have already come way down in the past couple days for ETH, as people have found the next party to rotate into BSC side of things with the yield farming and whatnot. So as an aggregator, and back to what we're talking about, OneInch, I don't want to play favorites. I want to be in every party. I want to be on DOT. I want to be on ADA. I don't care if it's junk, as long as it makes sense and the security is there and people are using it or wanting to use it. That it shouldn't matter, right? So I think they're positioned well. They have the right attitude. The tokenomics might be whatever. I'm not going to talk about the tokenomics specifically. I think the tokenomics for all of the governance tokens at this point in time is just too early to really tell who's going to win. And that goes for Uni, Sushi, Curve, all of them, right? They're all just, right now everything's doing great because DeFi's doing well, but in a bear market, that's when we'll really find out what this stuff's made of, right? So we need to look at the stuff we look at for exchanges. What's the TVL like? If we look at just the lists between ETH and BSC now, OneInch it has around 500 million TVL, which isn't massive by any means, but again, it's an aggregator. It's not a Sushi or a Uni. It doesn't necessarily have or need to have that kind of swap capabilities, not to say that it won't eventually rank higher as they incorporate other chains. All these metrics are ever evolving, right? So as this does go multi-chain, things are going to get a lot more interesting from the metrics perspective. What happens where and why, and will one chain win out on these aggregators? That's all things to consider. Will the OneInch token become multi-chain somehow? I haven't really looked into that or seen them talk about that specifically, but that's also another thing to contemplate. All of these multi-chain protocols, ZRX is talking about multi-chain as well, for what it's worth, as far as aggregators are concerned. So they're going to have some sort of dot ZRX equivalent or dot OneInch equivalent or BSC OneInch equivalent, right? So all that's important as well. But right now, this is where OneInch sits. If we look at TVL, it went sort of at its max sort of mid-February, early February, and has trickled off substantially, kind of in lockstep with the mining reward stuff, mining liquidity, ETH fees. If ETH fees go up, that prices a bunch of people out of the mining and farming game, so they have to go elsewhere, right? And that's probably a bigger effect than I think most people are really being honest about. It's the ETH fees, really, that is causing the trading volumes to drop, the transactions to drop. All this stuff is related. The users' numbers are down. All of this stuff is related to ETH fees, certainly. And as ETH fees are low and stay low, I expect these numbers to start rising again. You know, as there's more and more issues with Binance Smart Chain, which inevitably there will be, because all chains have problems, you know, people are going to move back to Ethereum. That's just how things go. So it's definitely at a bit of a nadir, a low point for its just metrics, you know, bare bones metrics, right? None of these look particularly bullish. And if we look at just monthly DEX volumes from Dune Analytics, and we look for OneInch, I thought they were on here. I guess they're not on here. If we look at volumes for Matcha versus ZRX, they're basically equivalent. It says these aren't mutually exclusive as far as Matcha and ZRX are concerned. So you can't really add these together and say that more volume is happening on ZRX. But over the past week, over the past 24 hours, fairly equivalent between the two leading aggregators. Definitely more traders on OneInch than Matcha over the past week, or than ZRX over the past week. And they are more in the conversation of Sushi versus Uni. You know, clearly Uni's the 10x winner, right? Uni's not going anywhere anytime soon. ZRX API, it's hard to know what all this stuff, Matcha, you know, some of this stuff is double or triple counting, but the point is it's still doing well, just not as well as it would be otherwise if ETH fees had stayed low. And if we look at the total aggregator volume, it's around 15%, and looks to be stable at 15 over the past few weeks. So the trading stats metrics are okay. They kind of don't match with price, because price obviously exploded, and then you realize, oh, it got listed on Coinbase. And then, you know, there's your epiphany moment where it's like, oh, it's not really like a sustained market effect. It's most likely isolated news type event, which makes sense why it's getting faded here, at least in the interim, relative to where it was. If we look at the transaction counts per week, they're slowly rising again from basically all-time lows, effectively. And a lot of that is Coinbase type stuff, average transaction values at an all-time high. Again, Coinbase related. So as fees kicked up, transaction counts went down, and then we just had that Coinbase listing, and fees are coming down. So I expect transactions to start perking up again. NVT, inverse metric of economic utility, is extremely overheated, or was. It's coming back down again, back to earth. So again, this was pointing to, be careful, this isn't a lasting or sustained type rally. If we go no average just per day, it probably picks the highs relative to price pretty well there, but it's rising again on the daily perspective. Nevertheless, on-chain stats were way under price as far as expectations for this metric specifically relative to where it was. Active addresses came way down. Active addresses coming up again. So it was a bit of an awkward moment for the announcement. You know, as far as price is concerned, obviously it is what it is, right? It doesn't really matter in the grand scheme of things, but to me it makes sense why price is behaving the way it is. If you look at OneInch, which is sort of a term, I guess, that could be Google just by itself. But if we look at, again, with price recently, with everything going on with OneInch in January, DeFi stuff in general, right? Everything was increasing. This is probably the exchange effect here, and things have come down slightly. So you're probably seeing Coinbase stuff here. You're seeing price obviously exploding, hitting all-time highs. That's a part of it as well. But on-chain metrics and volumes are a bit soft considering where price sits. It's probably more of a future expectation type speculation than just initial day-to-day what's going on at OneInch based on what I'm seeing under the hood with the on-chain metrics. But if we zoom way out, go on the 4-hour Binance, this is probably the best chart as far as like volume to look at and things like that. When it got announced and released in Christmas time, it was, you know, from a price perspective, that announcement and that airdrop could not have been at a better time, because that was just before everything lifted off. So what happened was people who wanted to sell the airdrop at that point had sold the airdrop, or those people were waning as all of DeFi was lifting off. So it really couldn't have been at a better time price-wise for that to happen, because otherwise, you know, if they announced and airdropped this in January, it would have been fighting this distribution effect, right? So I think how it worked out was great for them. Looking at the technicals, the 50 and the 200 on the 4-hour has been a bit noisy, been a bit crisscrossy, but before this lead up, before the Coinbase effect announcement, this was bullish. Not that based on backtesting here, I'd be longing every cross, but trend was in its favor for upside. If we measure the previous all-time high to the low in February, we get a 1618 and measured move between 8 and 9 and realistically, if this goes that high, it's probably going to 10 because that's going to be the psychological resistance. Knowing what I know again about the on-chain stuff and the volumes, I don't necessarily expect that soon, but it definitely is a likelihood if this aggregator stuff is here to stay. VPVR shows a bunch of volume in this area as prices just sort of consolidated, which is good if you're bullish because hopefully we start to see some support kick in here between the 200, the monthly pivot, the $5 psychological support, that sort of stuff. So I'd expect some sort of support to kick in at least by $5 at that point. You know, if all of this fails, if OneInch just dies off, you know, you'll start to see these lows get violated to the downside. So you'll see that really the last sort of support that I'd be watching is anything between 3 and 350. If that breaks, then this is likely going to get ugly to the downside for OneInch. Now, with everything else doing so well, that isn't an expectation, but you always have to be thinking about, you know, what happens if all this stuff just collapses, right? On the 4-hour cloud, the trend metrics were also favorable, bullish here before the Coinbase stuff leading into April. Currently on the 4-hour, it's telling you be careful with longs up here. It's probably going to go into the cloud. May test the flat Kumo here somewhere around 510, an edge-to-edge type of trade for those with the cloud knowledge, those who possess the cloud knowledge. Not exactly a massive trade setup here, but again, pointing to that $5 level as far as support is concerned. So in a vacuum, if I was looking to long this, I'd be waiting until all these flip neutral to bearish and then flip bullish again versus sort of buying here and hoping it goes up. OneInch had an interesting January, February, right? And then just sort of died off as BTC took over and OneInch consolidated. All the while, though, in March, we had this ugly looking inverse headed shoulders type pattern form with a neckline around 8,800 sats. And if you measure that out as the high at 8,800, the low at 6,500, you get a 1618 and measured move around 10K, 10.5, and that's exactly where price went and pulled back. So this is another lesson of never be afraid, even though this looks like it's a mess, it's all over the place, right? It doesn't exactly fit the box of definitive inverted head and shoulders type stuff. It was still a decent setup and target, right? Another thing you can look at here is the trend metrics. Again, we're pointing bullish on the 4-hour before this went bonkers, right? You even get this throwback to support at that level. So with alts, if there isn't enough data on the daily, you just have to look at the lower timeframes, and sometimes the lower timeframes are good enough where you get setups like this. So trend metrics still look okay. You're going to see support probably kick in around that same level, 8,800, 9,000 sats. Tons of volume support at 7,800 sats. Resistance decently sized now at 10K sats. So I wouldn't expect this to do anything massive anytime soon in either direction, just because it's sort of locked in at support and resistance. Now, this will get hammered if BTC breaks 60K, most likely, because it doesn't look like OneInch is primed on the USD pair to sort of do anything. So you'll probably see, this could stab 7K or lower, right? And at that point, you'll probably see people start to rotate into this. Based on that, that's just, you're just trading the range at that point if you're doing that sort of thing. But that's something to watch for on pairs like this, on setups like this, where it's neutral to bullish, sort of waiting to see what BTC does, right? 1-inch ETH isn't really a real pair anywhere that's traded necessarily, but again, you have this inverted head and shoulders. It broke up. It didn't quite reach its target. It's down below that level now again, and it just looks like a giant mess across the board. So there isn't exactly any bullish or bearish momentum one way or the other here. So all in all, aggregators probably here to stay. ZRX and 1-inch are the two biggest aggregators for dexes around, both of which are going multi-chain, which is good. If I'm a dex aggregator, I don't care where really those trades happen. I just want to be involved. volumes and trading stats on chain wise for OneInch have come off pretty significantly since mid-February, may have bottomed out recently and look to be rising again with the Coinbase stuff and ETH fees dropping off. OneInch USD looks neutral, flat. I wouldn't expect any strong momentum one way or the other. And the BTC and ETH pairs are similar to that, with the ETH pair looking maybe the most bearish among them. And I'll also mention Enzyme. We have an EastBTC Fund there. It's a non-custodial portfolio management tool, link in the description below. And we also have a managed DeFi portfolio that we just initialized a few days ago, and we're getting AUM ramped up into that as well. And so this will show allocations to everything. This will show all the coins that we're involved with. We have to list these on the smart contract side individually, so this isn't full list by any means, but we'll be adding around 15 to 20 coins that I'll be trading or dealing with in this fund. And you can see the trades, you can see the deposits, the withdrawals, that sort of thing when this stuff gets ramped up. So that's all for this one. Like, dislike, comment, share, subscribe. Hit us up in the comments below if you have any questions, and happy trading.